Welcome, ladies and gentlemen, to Commodity TV. It's the second day of the Precious Metal Summit, and now it's my honor and pleasure to talk to the first time to Marc Pais. He's the CEO of Arizona Metals. Good morning. How are you?
Good, thank you.
Yeah, thanks for taking the time. Arizona Metals, as it's the first time, please give a short overview on the company. What are you doing?
So we have two assets in Arizona. The K mine, which is a high-grade copper-gold-zinc-silver VMS deposit. That's our focus. We also have our Sugarloaf Peak project, which is a heap leach open pit target in western Arizona. Right now, all our budget, 99% of our budget is going towards the K project. We have about 40 million Canadian dollars in cash. We'll be spending at least 15 million over the next 12 months. The goal of that spending is to get the K deposit into a resource, but we also have a number of exploration targets around K that we'll be testing. We have almost 10 kilometers of untested strike. We're in a very prolific VMS belt. There are 60 past producing mines within 100 miles of us. This region has not been explored for the last 40 years until we came back. To date, we've spent about $30 million on K. We started with the 6 million ton resource, which was defined in 1982 by Exxon Minerals, 6 million tons at around 4% copper equivalent at the time it was defined, but that was using a copper price of 60 cents per pound. Very high cutoff grade, 2.5%.
Wow.
So obviously just based on that, we thought excellent expansion potential. You know, just lower the cutoff grade, there should be more tons. But we also noticed from the historic logs that Exxon ignored all the zinc mineralization. So typically in these polymetallic VMS deposits, you'll get copper gold zones, you'll also get zinc gold zones. In the zinc gold zones that Exxon ignored, we're seeing some spectacular grades and widths. So 50 to 100 meters running 4 to 10 grams gold equivalent.
Wow.
And even below the workings, we're seeing 100 meters running 3% copper equivalent. So extremely wide zones, which we think portends very well to have low capital, low operating costs. So, you know, at these kind of widths, your typical VMS mine might have a 3-meter cutoff where we're getting, you know, potentially 180-meter true width zones. So very potential for very low operating costs, but also very low capital costs.
Okay, super. So that sounds like you want to bring that into production already, but let's do one step after the other. You said you want to concentrate, of course, onto the K project. 90% is going into that. So what was the major work you have done this year, and what is then planned directly for next year?
Yeah, so we started drilling 2020. We have drilled around 75,000 meters into K over the last 3 years. We spent $30 million. We are currently in our phase 3 drill program. It's a total of about 75,000 meters. 30,000 meters of that is over, like right now, 30,000 meters is directly devoted to K to get it in a resource. So it's a combination of definition, infill, and expansion drilling. And we also have, I mentioned, 10 kilometers of strike. We've got what we call our central target where we've drilled 4,000 meters. So very, you know, early stage drilling, but we've had some good intercepts. And then our western target, we've only done 8,000 meters of drilling, but already what I would call a discovery hole. Recently, we announced 3 meters of 3 grams. We think we're on the edge of a large system. So, you know, over the next 12 months, we'll be drilling K, continuous drilling for the resource definition, but also exploring the central and west and the extensions. You know, we've only tested less than 10% of the prospective mineralized horizon.
Okay. And as you said, you have I would call it historic resource already on it. So this is now the proof of the concept on the one hand, and on the other hand, you want to enlarge that maybe already. So when can we expect the resource update? So
we're aiming for the resource towards the end of next year. We're estimating 30,000 meters. It may be more, maybe less. It depends on the geology. But, you know, we think roughly that 30,000 meters should get us to a very high confidence resource. You know, we're trying to get the majority of it in M&I rather than inferred, so we can go hopefully straight to a PFS or feasibility rather than doing a PEA on inferred resources.
Okay. As we know, first it has to be drilled, then it has to be assayed, and then we can calculate the resource for sure. But what would be, let's say, a conservative target on your wish list? We are talking hypothetically. What could you, what would satisfy you?
Well, we started with the 6 million tons. Our internal calculations when we started drilling were we need to get to at least, you know, we thought if we get to 10 million tons at these grades, we have enough for a standalone operation. That justifies the capital cost. And, you know, what we were looking for was you need to have a 30% after-tax internal rate of return, very quick payback. And we think at 10 million tons, you know, that achieves it, that justifies the capital. And the capital for this type of operation is really orders of magnitude lower than, say, your typical open pit with the same output. So very low capital cost. But, realistically, I think based on the drilling we've done now, I'm hopeful that we can significantly exceed that 10 million ton internal target. That's the goal.
Super, fantastic. Yeah. And metal-wise, we talk about copper, zinc, is that?
Yeah, it's
gold, probably?
If you look at a value basis with some, kind of spot prices, some metallurgical recoveries, the breakdown of the deposit is roughly 40% gold, 40% copper, and then the balance is zinc and silver. So from the preliminary metallurgy, what we're anticipating is 2 concentrates: a copper concentrate with gold and silver, and also a zinc concentrate with gold and silver.
Okay, wow, super. That sounds exactly what the market needs.
Well, that's
especially we're in the heart of the US. That's really positive.
Yeah, we're in a very, I think in terms of where the location, Arizona is mining friendly, and we're, I think, on the best type of land. The K deposit is on private land with no royalties. And the rest of our claims are Bureau of Land Management, federal mining claims. Importantly, where you typically see issues in Arizona are companies or projects that are on national forest land. So their permitting is through the Forest Service. Very different regime than the BLM, the Bureau of Land Management. The BLM is an affirmative process, so there's a clear pathway to permitting to production. That's that's the process we're following right now. So we're working on an exploration plan of operations, which would eventually become a mine plan of operations. We're doing all the associated de-risking work. And in addition to the drilling, we're doing metallurgy, hydrology, rock geochemistry, baseline environmental studies. We're buying additional private land for infrastructure. We're putting all the pieces together to get this to be an operating mine.
Wow, fantastic. And you want to develop it by yourself, or would you say, no, we are more explorers, maybe we need somebody helping us, or strategic partner?
Well, I think our board and our team has had success de-risking these type of assets and selling them. But the goal is to de-risk this enough that we can take it to a production decision where we have to decide, do we sell this, or do we bring in a kind of, do we bring in our own team to build it? I think the luxury you have with these high grade deposits is the capital is relatively so low that you could actually finance it on a junior level, but that's also what makes it so attractive to mid-tier and major companies.
Of course, they have to take it over for sure. Yeah. Okay, 90% of the work is now with the project. When do you intend to move a little bit more towards the second project?
So the second project, Sugarloaf, is different. It's gold only. It's heap leach. We recently announced we completed some met work, so that also has a historic resource, 1.5 million ounces at 0.5 grams. That historic resource was defined in 1982 down to only 70 meters deep. We've drilled holes that go 300-400 meters deep in mineralization.
Wow.
But a lot of that is sulfide. So the testing we just completed determined that sulfide, up to 85% of that is recoverable with potentially vat leaching or flotation. So economic processes, so we think we can have an economic flow sheet. So now it's worth drilling those deeper ounces. So it could be substantially larger than the 1.5 million ounce historic resource. We have 28 drill pads permitted at the moment. It's ready to drill, but we don't want to spend the money. The money we've raised to date has been for the K project. So the goal with Sugarloaf is to spin it out sometime in 2024. And we do it when market conditions are ready. Right now, the holding cost is very low for us. And when there are funds available, we'll spin that out, and our shareholders will get some fractional share based on their holdings. So at least our shareholders will retain any upside that comes out of that.
That's a very fair game plan, I would say. Yeah. Great. You said already $40 million are in the bank, so that's enough for next year also?
That could be 12 to 24 months depending on the budget. Super. So we should, the goal is to end next year with around 25 million in cash, but we should be, we should have the work done for resource as well as a significant amount of exploration work and de-risking work.
Of course. What is management share in the company, and who are your largest shareholders?
Yeah, so management and the board own about 12% of the company,
nice.
Fully diluted basis. And then we have about 30% of the company as institutional shareholders, primarily Canadian funds. No single fund with a huge position, except for maybe the JDXJ. We're on the index. They own about 5% of the company. We also have about 20% of the company is high net worth mining investors. So really out of 116 million shares, maybe about half the float is publicly trading. The rest is locked up with management funds and high net worth.
Wow, that's super. Sounds like a very healthy position.
Yeah,
great. Yeah. Fantastic. Marc, thank you very much. Please keep us posted. And it looks really great because the US need your metals and the world market too.
Yeah, no, thank you.
Thank you. Yeah, ladies and gentlemen, it was Marc Pais, the CEO of Arizona Metals, and you heard it finally really in the US, in the heart of Arizona, going on with 2 projects here. And especially, I think the K project is the key to success. This is something which can be really brought very fast into production also. And the company has already spent, of course, a lot of money into that. A lot of drills have been done in the past also. And the grades are fantastic, really spectacular. And I think great company, have a look on it, especially in those market conditions. It's a nice bargain. You get quality for the money. Check it out. Thanks for watching us, and bye-bye from Switzerland.